All right, folks. Good stuff. Welcome aboard. Thanks for having me, David. Let's go and get airborne. Let's get right into it. Look at that chart. I mean, up and to the right, and then just massive implosion here. A lot of panic on that screen, right? Well, a lot of panic if you don't know what you're doing. Everybody's a genius when the market's going straight up, which is not true. Only a couple geniuses are folks who can make money as it implodes, right? I've been trading since now I'm going to really age myself, 1991. But just take a look at the market since 2000. Does anybody see? This is the S&P 500. Here's the dot-com bubble break. And then here's the global financial crisis when we had to bail out Wall Street. Oh my God, we're going to die if we don't bail out Wall Street. Really? What happened? Straight up and to the right. I mean, there's the scandemic right there, folks. Everybody thought we were literally going to die, and millions did, thank you to a biological attack from China. But ladies and gentlemen, every one of these pullbacks has been an incredible buying opportunity. Now I'm really going to age myself. I started investing and trading in 1991 at Naval Air Station Key West in Florida. Does anybody see a trend? Oh my God, Whiz, stocks are melting down. There's the meltdown up there, folks, at the top right. Let me remind you as we jump into, I'm going to jump into my S&P 500, take a look at some trades to potentially help you protect your portfolio right now or profit if we get another leg down. Look at that chart. It cracks me up. If I had a dollar for every time I heard, this time it's different. You're right. This time it is different. Different circumstances cause the market to go down. It is an absolute buying opportunity, period. Every one of those cases, being at Naval Marine Corps Air Station, Miramar, when this happened. Oh my God, we're going to die. I was in the Chicago Board of Trade when that happened. I was at ground zero, folks. I ran over to the VIX pits when the VIX hit 90. Oh my God, we're going to die. We didn't. Every one of those were an incredible buying opportunity. Okay, so let's go ahead and take a look at the S&P 500 because we have a lot to cover. Remember, and let me just be clear, if you're new to investing, for every panicked seller, say it with me, what is there? Who is on the other side of a panicked sale? A happy buyer. Warren Buffett, over the past 6 months or so, has moved to cash, right? Absolutely moved to cash. Now he's walking in and scooping stuff like this up. So I have 27 minutes. I want to knock out 2 trades based on the charts. Let's go look at a stock that I call the Death Star. This thing literally takes over everything it touches. Amazon. Amazon has gotten absolutely destroyed. It topped out last 2 months ago at 245. It got as low as about $1.55. I told my members at Top Gun Options, I said, sell the wife and kids, mortgage the house, buy Amazon at 155. It got all the way up to about 190, 192 last week, and now we're kind of finding a happy place. This chart is screaming buy. Let me go back to the S&P 500 real quick. SPX, because I just want to show you a couple trades. Let me start with the SPX because a lot of folks, and you know, I don't blame you, are a little unsure right now. Wiz, I have no idea what's going to happen in the next 5 minutes, let alone in the next 5 months. I get that. If anything, we know that the president and the Treasury Secretary, Scott Bessent, can blink, right? There is, I hate using this word, a Treasury Secretary put under this market, or there is a Trump put under this market. When the bond market started breaking last week, they kind of started pulling their punches a little bit. So my opinion, the next 6 to 12 months from now, we're going to see a rip your face off rally, period. Or we're not. This is a binary trade at this point, folks. Either everything that's going on is going to work or it's not. We're not going to muddle through this dogfight right now for much longer, I guarantee you. If we get some certainty, we're going to rip higher. If not, we're going to implode. But I want to help you, looking at this chart right here. We have something called a dead cat bounce, right? I don't want to offend cat owners, but that's a Wall Street-ism, right? We imploded, dead cat bounce, imploded, dead cat bounce, huge implosion, huge dead cat bounce. Only one of two things is going to happen. We're going to keep going or we're going to implode further. I want to give you a heads up that some of you might not be paying attention to that might, and I want to help you out with a hedge here, that might happen. That CNBC, Fox Business News, the White House ain't ignoring this, but most people in the financial space are ignoring this. Is everybody paying attention to Iran? On March 7th, the president sent a letter to the mullahs that said, if you don't get rid of your nukes in 2 months, I'm going to do it for you. And Israel said, yeah, us too. We'll join you. Did you hear that? We are 3 weeks away from a potential strike on Iran. So as everybody's running around chasing the tariff ball and the trade war ball, I'm kind of keeping an eye out here a little bit. If the president or Israel goes through with a strike, fill in the blank, in the next month against Iran, the VIX will pop back up to 60, 70. The S&P 500 will implode back down to past these lows. Okay. So this morning in one of my live trade briefs with Top Gun Options members, I covered something that I call a trade that acts like a hedge. And let me be clear. When I use a hedge, I hope I lose money. Now I'm going to let that sink in. People are probably sitting there like, this guy's talking about trading and he's talking about, I don't mind losing money. Yeah. A trade, I better not lose money. I never place a trade if it's not going to make money. A hedge is my ejection seat, folks. I never went flying in the F-18 Hornet. I'm a former Navy fighter pilot. Never flew in the F-18 without an ejection seat. I never got done with a flight and got out and looked at the seat and said, well, that was a waste. I wish I had 800 pounds more of gas. So at Top Gun Options, I squeeze those two concepts together. A trade that I think is going to make money and a hedge that is going to protect my long-term bullish positions. Right now, I got long-term bullish positions in Amazon, JP Morgan, Bank of America, SIBO, Chicago Board Options Exchange. But guess what? I need to protect those. Okay, so I'm going to look at a hedge right now with you, and I think it's a trade too. I think we are going to have another leg down. I don't think we are out of the woods. And God forbid, as a man who wore the uniform and flown over Iraq and near Iran, I don't want bad to happen. Death, destruction sucks for everybody. Now, I forgot to tell you, I'm also bullish on Raytheon. So I'll tell you how I feel as Whiz. I hate war and all this stuff, and I'll tell you how I feel as Gordon Gekko or Jordan Belfort, the Wolf of Wall Street. Good. Get bullish on the defense contractors right now. Take a look at I'll pull the chart up right now. Go look at Raytheon. You should be long-term RTX. Raytheon, ladies and gentlemen. Again, I'm going to hate talking like this because I am a healed human being, but I have to admit I got this wrong. What did you get wrong, Wiz? On April 8th of last year, let me move this chart, this line over to here. Whoops. Can I grab it? Okay, out of the way. Ladies and gentlemen, on April 8th of last year, and I'm not going to get super political, Palestine, Israel, whatever. I'm talking to you as a trader. Look at the chart. Old Wiz on April 8th, I would have bought all the defense contractors. Why? Because the world was going to war, or at least the region. Look what happened on October 8th of last year, 2023, I'm sorry. And then let's just go to where Raytheon topped out recently. That would have been essentially a 100% return in the defense contractor stocks. Going forward, and I'll say this for the last time, I hate talking like this, but you got to look at world events, folks. The next time you see something big militarily potentially happening, it's going to be reflected in the defense stock. So right now, I would buy Raytheon with both hands. Look at this. They hit the bottom, and then, Trump saying, I'm going to bomb your nuke sites. The stock's gone from a bottom at like 113 up to 130. 130, folks. And before it hit this recent ledge, was up at 135. This is a screaming buy in Raytheon. When's earnings? Before I forget. April 22nd is earnings. So next week. Raytheon swung to a profit in its last earnings back here and raised its forward guidance. So look at this run that Raytheon's had. Now, clearly it's fallen off the cliff with everything else. But after everything fell off the cliff, now it's a story of single names. This was the knee-jerk reaction for every stock, from Apple and Amazon to Raytheon to SIBO to Tesla. Everything got hammered. Now, as the dust settles, individual names are what you need to start taking a sniper shot at. Raytheon is one of them, because there is no way. Well, I listen to people. When Benjamin Netanyahu says, we will never let Iran get a nuke, there's no daylight there, right? So when I just showed you this tweet, apparently one of the negotiators over the weekend, Steve Witkoff, said, well, if they just don't enrich as much, I think we'll have a deal. Whoa, I saw that over the weekend, or it was last night. I'm like, what? And then about an hour ago, he walked that back and said, nope, they have to get rid of everything, or we're going to blow them up. So bullish on Raytheon. There's other names in the, obviously in the defense space. There's a Lockheed Martin, LMT. That's not looking as good as Raytheon. That's why I don't trade Lockheed Martin. What else do we have? General Dynamics, GD. Well, a little recovery of late. I think there's a defense sector ETF, and I forget which one it is. But let me go back to the S&P 500, because that's kind of, everybody has this big, strategic look about them right now with the S&P 500. So this green line right here, that is the 20-day moving average. It's at 54 or 57 on the S&P. We kissed it and we failed. That's usually a bearish technical indicator. So oversold, overbought to a moving average, and a little bit of a fail. That's technically bearish. You can wait a day or two to see if we really are going to implode here. I don't care. I'm going to go out to here, because the president said you got about another 3 weeks to get rid of your nukes, or I'm going to take them out for you. Again, folks, this market is very, very tactical right now, just because we're talking about tariffs. And, I love the fact that China, Xi Jinping today said, we're not taking delivery of any more Boeing aircraft. Let's go look at Boeing. Boeing is subversive and anti-Chinese, so no more deliveries. We will not take any Boeing. Does anybody know what Xi Jinping flies around in? Say it with me. A Boeing 747. Xi Jinping's Air Force One is a 747, but that's a separate conversation. But Boeing obviously fell off the cliff too, getting a little bit of a bounce here. 2 weeks ago, the president just announced the F-47, the newest Joint Strike Fighter, a sixth-generation aircraft. It'll water your eyes. Boeing is skidding along the treetops here. Technically, Boeing has a government put underneath it as well, right? I'm old enough to remember the first time Trump was president, he bailed out Boeing. I didn't agree with that technically. Things should be able to burn. But these companies, like a Boeing, are national security. Not only do they build civilian airplanes, they build a ton of military stuff. Ain't no way Uncle Sam's going to let these type of companies fail. They can't. Their production lines are needed for defense things. So if you want a potentially conservative, long-term bullish trade, you got to look at Boeing. And it's a defense stock, like we talked about with Raytheon. So it's also seeing a little bit of a reprieve here on potential war. Enough. Whiz, get to SPX, because I am a little creeped out about what's going on. All right. I'm going to go out. Let's go out. What did I say? May 7th was technically when the president said, get rid of your nukes. Let's go out about a month from now. Let's go out to May 25th. Okay. I'm going to look at something called the at the money straddle. If you're don't trade options, just hang with me. You'll get the concept in a second. It's trading at 54.05 right now. I'm going to go look at something called the at the money straddle in the S&P 500 on May 25th, or the May expiration. So right there. Okay. It's $246 wide. Let me show you. And it went away. It's essentially, let me just go draw it on the chart. This isn't my numbers. This is the options market pricing I just looked at. The bottom is 51.25 in the options market on that date. And the top is 57.50. And look at that. It just happens to be that red line, which is the 200-day moving average. Everybody, if you don't get what I'm saying, just hang. Hopefully you're getting some basics. Based on the options market pricing for that strike in the future, not Whiz, they say it's going to top out here and then potentially bottom out down here at 51.25. Okay, I kind of call this the football field, right? The options market is saying it ain't going to run out of bounds up here and it's not going to implode down here. So out to that May expiration in this white space over here, I think there's some potential bad, either with more trade war, tariff uncertainty, or God forbid, Iran strike. So I want to put a lid on this market. I don't think we're going to have a rip your face off rally. I mean, we have here, man. This has been a kind of a relief rally. It feels heavy. So let's go take a look at putting on a trade up at the top. What did I say? 57.50. Okay. So let me just, close that. 57.50. And it's like entering my birthday on a website now that I'm older. 50. I got to keep scrolling. It's like the Price is Right wheel. I'm going to go in a little bit. Let me go 57.25, 57.30. Okay. Now, since I looked at those strikes, these are strikes from my brief this morning. The market went down a little bit, so I got to go down a little bit. Let me go down to 5,700. Okay, that's a little bit better. And I think a good price for this trade is about $1.25. So I could sell, let me just do one contract each. I could sell a single May 25, 5,700 put. That's me putting a roof at 5,700. And I'm going to buy an upside call a little bit above that in case I'm wrong. Whiz, Jesus, Ganesh, Buddha, and Muhammad came back to life and peace broke out. The S&P's at 1 million. Okay, I'll be happy, but I'll lose some money on this trade. So this is called a bear call spread. It's also called a credit spread. I'm getting paid to do this trade, $125. My max potential loss is $375. I'm risking $375 to make $125. That's a high probability trade too. It's a 60 with a 67% certainty you're going to make at least that much money. When I covered this trade in my brief this morning, we looked at 15 contracts in our model portfolio. It's based on a $100,000 model portfolio. This was risking about 5 to make 19 in the next 3 weeks or so. About a month. Okay. So here's what I do with this bear call spread. I place this trade, but I take this $1,900 I'm getting paid and I turn around and buy some downside puts. I'd go buy those 51.25 puts down here in case we do something like that. So the bear call spread makes money and the long put that I buy down here prints money too. Okay. And again, if you want to learn how to trade options, that's obviously what I do. We're actually in the middle of a free week of full throttle training and trading at Top Gun Options. I open up the doors for 4 days. Let me cover another very important chart that it's fun. And I'm not making fun of people, folks, but only, what did Warren Buffett say? You know who's swimming naked when the tide goes out. It's pretty funny to see all these hedge fund and smart money people getting destroyed because they're not hedged or they're not looking at this. The VIX, the volatility indicator. Look at the VIX. Let me do like a 3-month chart here. Write this down. Even if you know nothing about options, you will learn something from this statement. When volatility is cheap in the teens, buy it, get bullish. When volatility spikes and is expensive, sell it. The VIX is a heart rate monitor. It's not a stock. It doesn't go up and to the right like stocks are supposed to. It spikes when the market freaks out. It collapses when there's certainty. Instead of calling it the VIX, the volatility index, call it the uncertainty index. The VIX, the uncertainty index, pops when it freaks and implodes. Some of you might be looking at this and going, Whiz, oh, wow, the VIX really spiked up to 60. I'm old enough to remember in COVID, it went to 85. In the financial crisis, when I was at the VIX pits watching the anarchy, I think we topped out at like 90, 92, 95 in the Chicago Board Options Exchange. But does anybody see a trend? Volatility spikes. Oh my God, we're all going to die. No, we're not. So look at the VIX now, because I got some questions this morning. People are like, Wiz, why is the VIX coming in? There's still no super resolution on trades and stuff like that. Folks, it's already out there. Once something is known, it's known. Now, I know that sounds like stupidity, but listen to that again. The initial spike in the VIX was international trade war. Everybody, I'm shooting at everybody. Trade war, I'm going to win. And then what happened? Well, 90-day pause or this or, and I'm talking to Vietnam. Volatility is sliding. Now, I just told you about the potential strike on Iran and stuff like that. If or when that happens, you will see the VIX spike back up. You can jump on an options chain and jump out into the future. Let's just go look at like May 7th was when he gave them the ultimatum, right? Let's just open up all the strikes on the VIX for that date. Or, you know what? Let's just go to the regular VIX expiration on the 25th there. Let me uncheck these. Wait. May 7th. Let me get rid of it. So I clicked all, right? What's the VIX at right now? 29. Whoa. Look down here, folks. I'll circle stuff right now. We're at 29 on the VIX. Look, there's almost 200,000 calls at the 35. Look at all of that. I'm going to scroll up even more. So there are people. Wow, look at that. Look at the 55 strike down there, folks. The 50s, that's essentially almost double the VIX. Look at the 60 strike. Almost 100,000 in there. Let's go higher. Any other craziness? Wow. Folks, there's activity in VIX options at 100. So these are probably institutions that are no kidding hedging. These are smart. Hey man, if the trade war gets worse, Iran, Israel, nuke exchange, a VIX at 100 will be pleasant. So there are, these are, I hate to talk like this. They call them bin Laden trades, right? There were some trades that were placed like on September 10th that printed money. And we can talk about that some other time. There is actually in the Pentagon, in the SEC, in the FBI, there is a group of folks that look for unusual options activity that would pay off, God forbid, something horrifically bad happens. But look at all these upside calls in the VIX. We're at 29, 30, 60 VIX. There are people who are out here scooping up insurance. Okay. But that's the last chart I wanted to share with you. You got to keep this in your scan. I knew the all clear had sounded, at least for a little bit, when the VIX started imploding here. I started buying. I added to my longs in JP Morgan, Raytheon, SIBO, Bank of America, some psychedelic stocks. So pack this into your daily scan of things to look at, because this mirrors inversely the S&P 500. If I overlaid the S&P 500 on this, you'd see what? It imploding as the VIX went up. And then you'd see the SPX going up as the VIX is going down. This is what we call a pairs trade, right? I can be bearish on the market and bullish on volatility. The VIX, not yay, the VIX is coming in. Okay, well, the VIX is saying the all clear, maybe. I'm going to get bullish. Okay, and this is what I teach at Top Gun Options. You got to keep these type of things in your scan pattern. The VIX is absolutely one of them. Okay, so the VIX, the S&P 500, JP Morgan. Let me leave with one more. SIBO, Chicago Board Options Exchange. This is not good news for me as an options trader, but they're moving to 24/7 options trading in some names. Whiz ain't waking up at 3 in the morning to check options prices, baby. They did it for Hong Kong, Asia trading and folks to be able to trade U.S. equity options. I don't agree with it. I won't be trading them. Stop talking, Whiz. Why are you bullish on SIBO? Because of that. SIBO, ladies and gentlemen, prints money, first of all, with more 24/7 trading. But when the market freaks out, every time I've seen one of those massive pullbacks in the S&P 500 that I started with, the SIBO prints money. The options trading goes through the roof. So the last name I want to share with you is SIBO. They have earnings coming up in a couple weeks. May 2nd. I think SIBO is an incredible buy here. There's a ton of great intel. Let me see if I still have this SIBO article. If I can throw it at you before. There it is. Look at this. A thrill-seeking trade amps up heading into 2025. Stock options are soaring with everyday investors on market whipsaw. So look at this. Look at this chart, folks. Here's your average daily options volume. There's me at the Board of Trade in the financial crisis, and I thought it was nuts. There is options trading volume. Every one of these goes through the SIBO. If you don't know what this chart looks like, that's called a hockey stick. So the last chart I'd love to leave you with is SIBO. I would buy that name with both hands. I think I have a couple seconds to ask questions. Yeah, I'm teaching folks this week how to do this stuff. If you want to come check it out, you can join me. But let me answer a couple questions for you. What risks are unknown? When does that go effect? Is that only for big caps? William, I'm not sure. I was on a roll, man. So I'm not sure what you're talking about. If you can hit me with that. Ordinian, when the VIX is low, let's go. When the VIX is high, bye-bye. I love that. Oh, thank you. That's the defense ETF. I should have known that. DFEN. What a stupid thing on my part. Shield, SHLD is also one. Oh, Northrop Grumman. I missed that one. Good catch. Yep. Bill, I agree, man. Navarro is a liability. He is I'm not a big Navarro guy. I am a Treasury Secretary guy. I'm not. Navarro is a clown car, and so is Lutnick. Lutnick is not a sharpest tool in the shed either. So, ladies and gentlemen, everybody thinks they're a genius when the market's going straight up, but they really aren't. Okay, markets don't go up forever. They don't go down forever, obviously. So, it's at times like this where the doors start getting blown off at Top Gun Options because they're like, "Hey, man, I need help. I'm getting hammered. I'm here for you. I'll try and help you out, but don't think that when not if we rebound here, there ain't going to be another one of these. There absolutely will be another one of these. I've been doing this for over 3 decades. We'll leave it at that. And every one of these has been a buying opportunity. Do not tell me this one's different because everybody has said that. I get it. The Fed printing money out of thin air and, $37 trillion in debt. These guys are trying and gals are trying to end it. The hangover is going to be a little painful, folks, but I believe in America, and I believe in the next 6, 12, 18 months, we're going to see explosive growth. Okay? David, my brother, thank you for having me. I am on time and on target. I'm going to turn it back to you, my brother. God bless.